So my name is Ailey Roberts. I'm the Global Head of Sustainable Investing with BGO, and we are a global asset manager and investor across the Canadian, US, European, and Asian markets. And my role at BGO is to help integrate ESG and sustainability into our investment decision-making processes and to support our teams in helping to drive performance, create value, and mitigate risk. It's certainly challenging, so I think the first thing is just to be realistic about what is achievable given market conditions. I think we would all love to achieve net zero sooner rather than later, but given the economic environment that we're in, just balancing and prioritizing really our fiduciary duty to our clients is number one and needs to remain the priority. So we just have to be realistic about what is achievable really in the short term. Of course, we expect the market to pick up and hopefully we can, be able to drive forward on other, investments and really focus in on ESG. Not that we're necessarily, taking our focus off of it now, but really trying to balance those priorities, being realistic about the investments that we can make and looking at the capital that we have and managing that and prioritizing it accordingly. I think we also have to look at how are we underwriting our investments and how are those costs related to ESG being factored in. Hopefully we can include them, and we need to be, as an industry, prioritizing those and including those underwriting costs related to ESG upfront to avoid having any sort of adverse impact and impacting our returns throughout our investment hold. So, there's a big opportunity there that, the industry needs to really embrace. So I think that's one way that we can try and avoid sort of any adverse impact. Well, certainly long-term capital planning needs to remain the focus. As real estate investors, we are making decisions that have impacts well into 15, 20 years ahead of us, and we may not be the owner of those assets at the time, but they impact how our buildings are performing. So, if we are looking at more of a holistic building retrofit or a deep retrofit, looking at what equipment are we putting into that building today, and how will that building be valued into the future, and what priorities will the next buyer have when they're looking to acquire and build their portfolio. Certainly we're seeing institutional investors with ambitious net zero goals continuing to prioritize this and factoring that in to their portfolio sort of decision making. And so, the economics may not necessarily be there today, and the market drive may not necessarily be there today, but we have to think about, when are we going to exit the asset, whether it's in 2030 or beyond. Market conditions and priorities will be different at that point. So we need to think about future-proofing our portfolios and our assets to what will the market value in the future, just like we would in any other sort of decision-making, but applying that ESG factor to it as well. So I would say the leading institutional investors are really thinking about ESG holistically in their portfolio. They're not just thinking about the environmental component, but they're also thinking about how it impacts their portfolio from a social perspective. We tend to get environmental or net zero tunnel vision, which can really sort of minimize the factors and impacts on how do our investments impact our communities and the people that are surrounded by them and utilize our buildings. So we have to really think about the tenants and occupiers of our buildings as well, and how the decisions that we make in our buildings can impact them. So taking more of a tenant and occupant focus, and certainly taking that into consideration in addition to the environmental benefits of that particular project. We're also seeing investors and real estate managers doing more comprehensive ESG due diligence and really taking those factors into consideration upfront, understanding both the risks and opportunities associated with our investments from an ESG perspective. It's important to do that assessment upfront because not just to understand the risks, of course there will be, but also how can we use ESG as a tool to help create value. So understanding those risk factors as well as opportunities is really important. And also pricing that into our underwriting is also a critical component as well. We also need to take into consideration the physical risk, the physical climate risks associated with investments as well. Especially in the world that we operate in real estate. It's a very, you can touch and feel it. Our buildings are very much prone to the impacts of our climate, whether that's, increased rain and potential flood risk of our buildings. How is that going to potentially impact our insurance premiums on our buildings? And we're starting to see the insurance industry really catch up to all of this and starting to price that into policies. So we need to understand what those risks are and really pay attention to what physical climate risks are impacting our portfolios, because we're seeing climate change so quickly, probably quicker than anybody has realized, and it's here today. It's not necessarily a factor of 10, 20 years into the future. Our winters are colder, our summers are hotter, and that impacts how we operate our buildings. So as we continue to see those impacts, we have to understand how will that impact the utility costs of our buildings as well. And can we prioritize things like energy efficiency to help mitigate that, or improve the building envelope of our buildings as well to help prevent sort of that adverse impact? So we do need to think about it from a whole building perspective, and not just necessarily the low-hanging fruit, but how can those adverse impacts from climate impact our buildings? I would say a main tool and one of the most recognizable tools that we have in our industry is known as GRESB, or the Global Real Estate ESG Benchmark. GRESB is a conglomerate made up or initiated by global investors, initially started out of Europe, that has really become the framework and the benchmark of which real estate owners and managers can help to benchmark how their assets are performing against industry best practices. So this is covering environmental, social, and governance factors. It's also primarily looking at building performance and how are our assets actually performing from an energy, water, waste, GHG emissions perspective, and how is that compared to our peers. So there's a lot of really fantastic tools within GRESB that we're really seeing the industry embrace, and really taking ESG into consideration throughout the entire investment life cycle. So from acquisition, development, retrofits of our buildings through to operations, as well as considering ESG on exit. And that's really where there hasn't been as much activity or necessarily a focus in the past, but the exit is an extremely important component of our investment strategy. So GRESB has helped to introduce new and emerging topics. It's really placed a focus on things like embodied carbon most recently, things like biodiversity, emerging topics that the industry really hasn't necessarily gotten our arms around yet, but it's kind of creating more of that tool and really being used as a tool to help create dialogue around important issues. But other best practices that we're seeing which help support GRESB, things like GRESB reporting, are the fundamentals of data management. As the old saying goes, you can't manage what you don't measure. And so with tools like energy performance data tracking tools, we're able to quantify and measure how are the actions that we're taking in our buildings creating impact and helping to drive down our consumption, but also how is that helping us create value through utility cost savings? And what are the costs avoided related to the investments that we're making? So really having access to that data is critical. And also it's a critical component in our journey towards net zero. There's really been a focus on obtaining whole building data related to our investments, because we need to understand from a whole building perspective, what are the opportunities to decarbonize our buildings? So through prioritizing data management and good quality data, we're able to make more data-driven decisions, which is a critical component to how we manage our real estate investments. That is a crystal ball question, but I think there's a lot of great information out there that's really pointing to the priorities that we're going to see. I think the industry, while we've been in this exploratory phase and we're trying to figure out our priorities, and we've really focused on the planning element, I think into the next year and beyond, we're really going to have to move into more of that action and implementation and the execution of these really important strategies that we're building for our investment. So I hope that we can really move into that planning and execution phase. The industry has come a long way and people are a lot more knowledgeable on these important topics. So we've really built up that institutional knowledge and helped to educate our team members, but I think education will continue to be a priority. There's so much that our investment teams need to understand in such an evolving space. We've had a really interesting sort of comment that we've heard from teams is that in ESG or sustainability, the ground is continuing to shift underneath our feet. So it's such an evolving area. There's always a new topic to sort of focus on. And so we need to continue to keep up with that change and help to educate our investment teams on a continuous basis, because there's just so much. And so it's important to keep them engaged. So education is certainly going to continue to be a priority. And then I would say also continuing to engage and push on engaging with others in the real estate supply chain. So for example, brokers, our leasing teams, these are really key components of the entire sort of real estate investment and management sort of ecosystem that we have. So it's important that not just our asset managers and portfolio managers understand these topics, but it's the people who are actually selling our buildings. We need to make sure that they understand what they're selling and what the priorities are and what the features are of that asset. So hopefully we can move into that next phase of engagement and continue to train and upskill our teams on these important topics.